Hey everyone, and welcome back to the Colton Elliott Podcast. We are here to talk about all things real estate. Today's episode is going to be an absolute listen. You're going to want to stay tuned. We're here in Tampa Bay, and we're here today with no other, Bryan Kennedy. He is the founder of Statewide Mortgage Company. He's a seasoned lender. He's also the broker and owner of Statewide Mortgage Company. Bryan, it's a pleasure to have you on today.
Colton, appreciate it. Appreciate the invite. Looking forward to the discussion.
Awesome. So I want to dive right in. I don't even want to waste any time. Tell us a little bit about yourself and how you got started in the mortgage industry.
Well, Colton, you know how sometimes the best things in life kind of just fall into your lap because we plan, and sometimes those plans don't work out. This is a story that exactly the way this played out for me. I was doing loans as a young guy, and we had the owner of our entity was a heavy drinker. And he would come in for a couple hours during the day, and then he would leave, and we would hear stories the next day about all the ongoings. I got concerned that one day he's not going to show up, and the light went off, and I said, I need to do this for myself.
That's amazing.
And that's what prompted me to open Statewide Mortgage.
That's amazing. And how long ago was that?
That was in 1992.
Wow, quite a long time ago. Been in business for quite a long time. That is awesome. So what separates Statewide Mortgage Company from other lenders in the Tampa Bay area?
Yeah, that's a really good question, and I get that asked a lot. And really in today's lending world, experience is really the key factor. I mean, I've been through many, many different types of markets, many different loan programs, many different types of lending. And between myself, my processing staff, as you know, Leanne, we've got a lot of years of experience, and experience makes a tremendous difference. Experience, and not only that, but also with the relationships that we have with our wholesalers that we have had for many, many years.
Definitely. And that is so true on so many different levels. It's not only just educating, the buyer, it's, educating real estate professionals as well and guiding them through the process to be able to guide our clients through the process. So that's really, really good.
Exactly.
So I want to dive into first-time home buyers and just really the first-time home buyer essentials and kind of what that looks like. And I guess the first big question is, what are some of the biggest misconceptions first-time home buyers have when starting the lending process?
The biggest thing we hear these days and have heard over the years is everybody thinks they can qualify. And although we would like to think that everybody can qualify, it just doesn't work that way because first-time homebuyer programs go through the exact same similar guidelines that any other program does. They just have some additional perks that helps that first-time homebuyer. So that's probably the biggest misnomer that we deal with.
Absolutely. That's good. What documents or information should first-time home buyers, have ready before speaking to a lender?
It's always good to have or at least know or have their annual income or monthly income, what debts they have.
Okay.
A lot of people today carry Credit Karma or one of those types of things, so they have an idea what their credit score is, and then do they have any money in the bank? How much money they have in the bank to work with on a down payment or whatever the case may be. So really those 4 or 5 things will give us a really good quick picture of what we need to look at.
Perfect. So just to recap, your debt to income ratio, your credit score, which I believe you can also check with like TransUnion, right? There's major bureaus like that to check credit. And then how much cash, for down payment. Okay, perfect. Now, what advice would you give someone who wants to buy a home within the next 6 to 12 months, would you say?
That's easy. Get with a good mortgage loan originator right now. Get with that person now. Get there, find out where they're at. And if there's any bumps along the way that they need to iron out, they've got a few months to take care of it. So get them, that way they can get with that person, they can tell them exactly which direction to go, and in 6 or 8 or 10 months, they're ready to go.
No, that's smart. It's smart to get ahead of the curve because there's so much more in the process, when it comes to choosing a home and seeing what you're actually qualified. So that's
Absolutely.
awesome. That's perfect advice.
Absolutely.
So I want to dive into the pre-approval process and kind of, what does that look like? Could you walk us through, the pre-approval process and why it is so important in today's market to do so?
Yeah, and we're going to go back to similar to the previous question, and we've got a couple different ways we can do it. Everybody does a little differently. Some MLOs will go ahead and send out the link to the application, have the proposed person fill that out, pull that information back and do it. I actually do it the old-fashioned way. I get on the phone and I talk them through it, and I make notes like this.
Smart.
Okay, I make my notes, and by the end of that conversation, I've got a really good idea on what kind of a pre-qualification we've got.
That's smart. No, it's really nice. Everything nowadays, most of the lenders have, their online process, and
right.
But it's really nice to have that one-on-one conversation. I'm sure it gives you a better idea on where their client is at.
Much better. And just to add something to that, Colton, too, if you don't mind.
Sure.
We were just discussing this yesterday, and several years ago, we would meet 9 out of 10 of our clients face to face.
Oh, wow.
Today, those numbers are just reversed.
Wow.
We hardly ever meet them until we get to the closing table. So it's really a reversal of actions today as opposed to just a few years ago.
Wow,
so,
that's very interesting. Yeah. That's good to know. How long does the pre-approval typically last for?
We really like to, officially say it's good for 60 days.
Okay.
And obviously, when we offer that pre-approval, the main thing we do is say, if you are thinking about making a move on this pretty quickly, okay, here's what not to do.
Sure.
Okay. And I think we're going to get to that a little bit later on. But 60 days typical.
Perfect. Awesome. Now I want to dive into loan programs and lending options. And I really want to dive deep in this because there are so many different varieties and options out there, whether it's county, whether it's the wholesalers offering programs, mortgage types. So first off, I want to dive into this. What are the main types of loans available?
Just the main, the overall is obviously you've got FHA.
Okay.
You've got VA for our veterans. You've got USDA for our more rural areas. Your conventional, Fannie, Freddie, and then your non-QM loans. Non-QM loans being no income documentation, bank statement loans, anything out of the Fannie, Freddie, and government realm.
Very cool. Very cool. And what are some general qualifiers, for those loans like FHA, minimum down payment, things of that nature? Yeah,
normally on a conventional loan, the published debt ratios are 28 and 36, meaning 28% for your mortgage payment versus your total monthly income, and then 36% for total debts versus your income. FHA typically runs 31 to 34. However, in today's world, we use desktop underwriter, all your automated underwriting systems, and we are getting and closing deals with back-end ratios in the upwards of 57, 58%.
Wow.
So it's all about that automated system. If the automated system with its technology likes that borrower, they give us an approval.
Perfect. Now, I want to dive into, we have a lot of younger people looking at buying homes now, a lot of younger professionals, getting to that stage to where they're thinking from renting to owning their first home. How can someone who is self-employed, because a lot of nowadays we have a lot of self-employed young professionals and people who are self-employed. How can self-employed individuals qualify for a more easy loan in today's market?
Yeah, that's a good question. The when you get to self-employed, you typically get into, not all the time, but you typically get into tax returns.
Okay.
And tax returns, the whole idea about a lot of people being self-employed is so they can write off everything or write off a lot of things. They don't have to pay a lot of taxes at the end of the year. Unfortunately, when it goes to a home buying situation, that works a little bit reverse because we're going to work off of tax returns. So if we don't go off of tax returns, then we've got a couple of other options. We've got basically the non-QM options, which we can potentially go off of bank statements, business statements, or personal statements, okay? And then there's also some what we call community programs, which are limited documentation with enough of a down payment that self-employed person can go in without documenting any of their income at all.
Okay, that's very cool. That's very interesting. And
on that note, we just here not too long ago, we actually closed a $2 million loan. It was a $3.2 million purchase. The gentleman put down $1.2 million, so we gave him a $2 million loan, and we never verified a penny of his income.
Wow, that's crazy. That's very cool. So, could you explain what points are and what makes sense to buy them down?
Yeah, points. It's kind of it gets into be a little bit of an intricate calculation because 1 point, of course, in the truest sense of the word, is 1% of the loan amount.
Sure.
So the question becomes, well, if I can put down 1% or 1 point and get my rate down a half or 3/4 of a point, is that worthwhile? Well, the $1 million question is, and there's a lot of different things that go into this, is we back into a calculation and see, number one, how much is that going to save you per month with that rate reduction? How long is it going to take me to pay back that payment? Am I going to be in that house in 5 years? Am I going to be in that house in 7 years where that starts becoming cost effective? So there's a financial calculation, then there's also what the borrower's intentions are going to be in the upcoming years.
Gotcha. So it really is a depending factor.
It really is. Yeah, it really is.
That's awesome. How should someone decide whether they should choose a 15-year mortgage and a 30-year mortgage?
A lot of times, more than not, it just comes down to qualifying.
Okay.
And because 15-year mortgage is going to be more expensive, a lot of people won't qualify for that. Here's what we do in a lot of cases, that because they really want, matter of fact, I've got one we're closing on the 27th, and because of her situation, she wanted a 15-year. We can't get her a 15-year. She only is approved for a 30. So what do? We generate her an amortization schedule, and we say if you put down an extra $200 a month, the loan is going to pay off in 15 years. So you do it yourself. It doesn't work out on the actual mortgage statement, but you do it yourself, and therefore every month it shows that additional principal being applied, and therefore paying your loan down faster.
That's awesome. And I know we quickly skipped over the programs and stuff. I'm going to get back to that in just a brief second. But I wanted to ask you too, are there any benefits to working with someone local to maybe the Tampa Bay, as a lender versus a national scale lender?
100%. 100%, yes. And we get those calls all the time that somebody has been communicating with a lender out of Michigan or wherever, and they're confused. And what about this and what about that? The benefits, obviously, is that, locally, especially for someone like myself who's been here for quite a while, we know the landscape.
Yeah.
All I have to do, give me an address, and I'm going to be able to pull up without even pulling anything off a public record. I know about what that property is going to be worth. I can communicate. I've got access to all that information. And when you're dealing with a lender that's out of state, them not knowing the local landscape is really a negative for the buyer and the borrower. So it is a huge benefit for that person to use a local a lender.
That's awesome. Yeah. And that's so true too. And as a local lender and even a local real estate agent,
Exactly.
they're going to know the area. It changes the perspective so much if somebody was out of New York or something and we're based out of Florida.
Right.
So it's a big difference here.
Yeah, huge difference.
I wanted to ask this, and then we're going to dive into the programs. Can you explain like the typical process? I know it's more in depth typically, but basically ABCD, from the point of, getting lending to closing essentially.
Yeah. So, for an example, just like the folks I talked to last night, went over their pre-qualification. Yes, you're going to be qualified. What I'm going to do now is I'm going to go ahead and send you a link to our application. Okay, you're going to go ahead and complete that. We're going to bring it back in. We're going to go ahead and run your automated approval. We're going to get that approval. As soon as that approval comes, we're going to send out disclosures to them to sign, which is going to be included in that disclosure package is the intent to proceed. So once we get that disclosure package signed, then we will go ahead and order the appraisal, okay? While that appraisal is being ordered, that file is going to the underwriter. So that file is being underwritten, being documented, basically validated by the underwriter. That appraisal comes back in, they put their stamp on the appraisal, and it moves into the closing department.
Very cool. That is awesome. And we're going to have to, just a side note, I know we're spitting out so much information. If you go to www.coltonelliottrealtor, that's 2 L's, 2 T's.com, we're going to have a breakdown once this podcast goes live on the things that we talked about to give you just a more general idea, what the lending options look like for first-time home buyership. And also, if you wanted to get pre-qualified, you can scan the QR code that's going to be on the website there. All right, so I wanted to dive back in. I know we skipped over and went into other things about the first-time home buyership programs and options there are, whether that may be county or your wholesalers or state, federal, whatever.
Lots of options.
Okay.
Lots of options. And when it comes to the local, state, and county programs, as you know, Colton, they come in and out because they fund them, and then the money goes, and they don't have
money
it, and
runs
so on.
out quick.
Just what happens. Okay, so we've got those options. Okay, and then we've got wholesaler options, which are basically availability of 100% financing because they've got the down payment assistance program that they can utilize without an outside, a third-party source, okay?
Very cool.
So one of the advantages of the using the wholesale lender is, number one, it's a one underwrite, whereas when you're using, let's say, the city of Tampa, you've got the wholesale underwrite, and then you've got the city of Tampa underwrite, okay? So now you've got two underwrites, and sometimes they have a tendency to conflict. So we've got to be careful with that because that Tampa program, maybe their debt ratios allow for X, and maybe our system allows for X, and so forth. So you've got to be careful with that. But yes, we've got a lot of different programs available, both local municipalities and with our wholesalers.
So when it comes to local, you're saying that, depending what county you're buying in, it may matter to what program you're going to maybe categorize in. Is that correct?
Yes.
Okay.
Yeah, absolutely.
Perfect. And, what are like typically qualifiers? Is it typically income, would you say, is a big qualifier? What does a qualifier look like for these down payment assistance programs and these first-time home buyer?
Yeah, and that's the other thing. With the wholesaler DPA programs, they don't put any limit on the incomes, whereas a lot of the local programs,
they do.
They're income limits. Mm-hmm. Okay, so there again, you've got that contrast, and you have to tread lightly on those programs. The good news is that if you get one of the grant programs that might allow for a substantial amount of money,
right,
and it may be repayable, it may be forgivable after 5 years.
Yep.
You've got a lot of different options. It just depends on that specific program.
Yeah, and it's interesting. Like Bryan said, a lot of the times the lending options, programs, especially some of the county ones like Dare to Dream, there's just so many of them, and the money does run out fast. So if you're going to do it, plan in advance, talk with Bryan. he will get you on the ball to when they are refunding, things of that nature. But, you know, it's just very good. So I want to dive in. Appreciate you talking about that. That's
Sure.
good. You know, especially, you know, if you don't technically meet the, you know, cash down payment, sometimes those programs are really great. You gotta be, you know, above the curve here because the money really runs out fast.
And as you know, Colton, those programs, all of them are hot right now.
They are.
I mean, we are definitely in a first-time homebuyer market, and those programs are hot. So those funds, the local municipalities, those funds have a tendency to be reserved and run out quickly. And if you talk to any of our wholesalers that do the DPAs, 70% of their volume right now is down payment assistance. Yes.
Yeah, it is big. You know, we're definitely seeing in the market today a big price reduction. So we're seeing a lot more, you know, affordability to where people can come in and buy as first-time home buyers. So awesome.
Yep.
I want to dive in. This actually leads us right in a good spot here and going into current market and expectations. What are some realistic, you know, timelines for closing a home in today's market, would you say?
Well, that really depends on the type of loan that we're dealing with.
Okay.
We had one not too long ago that we closed in 11 calendar days. Okay. By the way, that was not a first-time home buyer. That was somebody that put 50% down. We had an appraisal waiver, and it was done just like that.
Wow.
So we do have that availability. We do have the availability to get those things done. Typically, right now, even with the first-time home buying programs, we're running 25, 30 days.
Okay.
In some cases, maybe some problems pop up and they drag out for 35 or 40 or whatever. But fortunately, right now, we're able to turn them very quickly.
Wow, that's awesome.
Yeah.
That is very good. So what is one thing, you know, maybe buyers don't realize about the underwriting process?
One of the things that buyers don't realize about the underwriting process is that nothing happens unless you get me what I asked for. And I mean and sometimes we have a tendency to run into that because we go, hey, we need this and this and this, and they think everything's happening behind the scenes, and nothing's happening because we don't have the information. So we run into that a lot.
That is by far true, and that goes with anything. That goes lender, title, etc.
Yeah.
If you, you know, things are happening by the scenes, but if we ask for some details or documents, you know, that could help off the process quite a bit if they aren't, you know, sent in a timely manner.
And those people that do send them in a timely manner, I'm one of those type of folks that, number one, I appreciate it. So I'm constantly telling them, you know, thank you for doing this because, you know, just it's helping you, but it's helping us help you, you know.
Exactly.
So it's always a wonderful thing to work with people that are really on the ball when it comes to that.
And a lot of times too, you know, with that, if we are getting everything rolling on time, you know, obviously depends on the profile in that client, but we can close early. You know, a lot of times, you know, we get clear to close early because we're getting those documents on time. So they help you as the client out as well, which is very cool. So I want to dive into, you know, what should buyers maybe expect after a pre-approval?
Well, after the pre-approval, depending upon how deep they want to go, we may be asking them for exactly what we would on a regular approval. Just supply us with all that information, because 8 times out of 10, there's always things that really need to be verified. You can ask people a question and they give you an answer, but it's not necessarily what you really need from a documentation standpoint. So we really like to get all that in. Like we've got a perfect example of a gentleman that's coming out of truck driving school this week.
Wow. That's very cool.
And he's already got his job lined up. And he was like, I can qualify? I said, absolutely, you can qualify. Wow. One of the things I want to look at immediately is your contract. Okay. So send me a copy of your contract. But yes, because education okay, is the same thing as work experience from an underwriting standpoint. So this guy is going to be eligible right after he gets out and starts working and gets a pay stub.
That's very cool. That's actually really amazing to know, and I'm sure not a lot of people actually know that. Right. So that's great. Do you think interest rates will drop or rise or stabilize in the near future? That is a hot topic.
You like that question, don't you? You like that question.
That is a hot topic right now.
It is something that we're talking about every day. And as you know, I've been through a lot of many different markets, ups and downs and so forth. And based on everything that I'm seeing right now, I don't think we're in fear of rates going up. I think they're either going to stay right where they're at, but I do believe at some point in time, whether it's tomorrow, next week, or next year, I think we're going to start seeing some movement in the rates in the downward direction. That's
good. That would be good. Do you think it's going to be 2 or 3%?
I don't think so.
Okay.
I think realistically, we will get at some point in time we will get into the 5s.
Okay.
And I kind of think that's probably going to be a plateau for the foreseeable future.
Okay. Yeah. Well, that's better than the high 6s.
It's better than the 8s.
Yeah, better than the 8s.
Yeah. Exactly.
Most definitely. Man, I want to dive into final tips, tools that we can leave our audience, more inspired, more equipped, in the process. If you're thinking about, going from renting and going into first-time home buyership, I know that is quite a leap, so to say. So what are some resources or tools do you recommend for people that are just starting their journey?
I personally like to, speak with them, and I like working, as you know, I like working with agents that are good communicators with these folks.
Definitely.
Okay, because the one thing that they have to understand is that, obviously from a renting standpoint, you pay your rent, and that's it. All bets are off. You don't have to really worry about anything else. Once you get into the buyer category, guess what you've got, okay? You've got lawn care. You've got a separate garbage bill.
Yeah.
Depending upon where you live, you may have a separate water bill.
Or HOA.
Okay?
Yeah.
So all of these things have to be taken into consideration, and obviously we take into consideration those items from an underwriting standpoint because we have to.
Absolutely.
I mean the HOAs and that type of thing. Obviously, we don't calculate water bills and garbage, but we have to take that into consideration. But it's important for these folks to understand that this mortgage payment is not going to be the last bill you get each month. Because they've been used to that. That rent versus buy, that's what they've been used to for the most part. And this is going to change. Not to mention my water heater blew up. Repairs, light bulb, all the other things that you don't really deal with on a regular basis from the renting standpoint.
Yeah, and that's such a good point. There are going to be so many more things, to look out for, and just things that like you said, need to be repaired. The yard now needs to be maintained and mowed versus being an apartment complex. You don't have to worry about those things. So there's a lot of different factors. And again, we're going to have a cheat sheet, a checklist that kind of gives you an idea about what to look for. Again, if you go to ColtonElliottRealtor.com/podcast, we're going to have at the bottom a cheat sheet on just things to, be keeping out a look for when it comes to, maybe thinking about taking that switch from renting to now buying.
Right.
So,
and on that, I was going to say something. On that note, we're seeing right now, and you're seeing it as well. We're seeing that rents are starting to soften just a little bit.
They are.
Okay, they're starting to soften a little bit. Where 18 months ago they were zooming through the roof and everything. So we're seeing those soften a little bit, and the break-even point right now between an alleged proposed mortgage payment and a rental payment are coming into play as far as similar square footage and what we're looking at are coming into play where they're right there. So it seems like that we've got that we're going to continue to have a lot of people that are really going to be inquiring about the home ownership, where and I think that's going to continue for some time now.
Most definitely. And, we look at Tampa Bay too, and we have so many young professionals, young people that are moving into areas. So it is truly going to be a huge wave, of first-time home buyership, which it's an amazing feeling, to be able to move from renting to actually be a owner and have ownership and property. There's a freedom that comes with that for sure.
Right.
I want to dive into, what's one thing, someone can do and today to be ready to buy within a year?
Well, that's, kind of going back to one of our earlier questions is get with that mortgage loan officer. Get with that person now.
Wow. Yeah.
Okay. Even if it's a 5 or 10 minute phone call, that person's going to be able to quickly, that is, if they know what they're doing, they're going to be able to quickly tell you, man, you're good to go. You could go now. You can go in 6 months if you don't change anything, whatever the case may be, or we've got 2 or 3 things here that you really need to be taking a look at to get resolved. Okay, and I'll give you a good example. We've got a gal that had divorced last year, and there was their home was involved in it, and as opposed to the divorce decree stipulating one party or the other responsible for the mortgage payment, they left it open and just said, here's what we're going to do. We're just going to sell the home. We're just going to sell the property. That was the only stipulation. So unfortunately, it sounded like it was a little bit of a nasty divorce.
Sure.
So what happens is they put the house up for sale and nobody makes a payment. Okay. So when we pulled, she didn't say anything about it because she was unaware. So when we pulled her credit, she had 3 lates on a mortgage last fall.
Wow.
So here's a prime example of what we're talking to. So I said, okay, here's what we do. We're not dead in the water. We're just postponed. Okay.
Exactly.
Because I need 12 months of after a mortgage late to be able to qualify you, because everything else is in good shape. Everything else is fine. We're good. We just got to have 12 months of those mortgage lates. So I said, we're good. We're just postponed a bit. So we've got a couple of other little things that I'm instructing her to do between now and then. And come October, we're gonna reapply. We're gonna be back in business, and she'll probably be in her home by the end of the year.
That's awesome. So you can typically quickly assess, whether just by a phone call.
Absolutely.
That's amazing.
Yeah.
I wanted to ask too, one of the things I was thinking here while you're speaking about that is, should people, when they're getting pre-approved or they're on their contract on a home, be going out furniture shopping and getting loans on furniture and other things, or buying a car during the process?
If I told you how many times over the years that I pulled my hair out because of that very factor, and unfortunately, you can even tell people, and this is. This is a part of the process. Any good originator, this is the part of the process. Is that when you make application, okay, here's your do's and don'ts.
Yep.
Okay. Do not do this. Don't go buy a car. Don't go buy furniture. Don't go get a credit card. Don't do any of these things. Okay.
Yep.
By the way, Mr. Borrower, if there's something comes up, emergency, whatever, and something that you feel like you really have to do, call me.
Yep.
So we can structure that transaction accordingly. And I can guide you in the right direction that will not interfere or impede with that approval process.
That's good.
So,
That's good to know.
that's one of the last things that any good MLO is going to tell their people is don't do these things. And if anything comes up,
Right.
please call me before you do anything. I don't care if you're out at Cane's on Sunday afternoon, okay? Pick up the phone and call me. I will answer. Colton can verify that I will answer on Sunday afternoon and guide you through what needs to be done.
Perfect. Golden. Okay. This actually leads perfect. And our next question, how does your faith or values play into your work and how you serve your clients?
It's huge. It's everything because, we are responsible and we are in the know of everything there is to know about that borrower. That person's entire private life. I mean, we know everything about it.
Yep.
And if you have, they have to trust you first of all,
Of course.
because that's a critical part. They have to trust you, but if you don't do the right things, you won't be doing anything for very long.
Yep.
And the word, bad news travels at light speed and good news travels slow. So you would find out real quick. So it's credible. Honesty is everything. And let me go back on that topic because it's kind of interesting. It's something that we're very proud of. Over the first 16 years of Statewide, and back in those days, as you know, we were doing a tremendous volume. We were closing well over 100 loans a month. During that time, we had 3 registered complaints with the Department of Banking and Finance, meaning a consumer complained officially, and the department investigated us. All 3 complaints were dismissed after investigation. So, in other words, it was people looking for money, looking for whatever. So, but we didn't do anything wrong, and that's really a wonderful mark because doing that kind of volume, especially doing that kind of volume, and never having any issues. That's something to be proud of.
That is for sure. I mean, as you know, as you scale, it gets more tricky to balance things out.
Right.
But that's good. Just being very integrity, right, and knowledgeable, right. It really comes down to a communication play and being knowledgeable because most of the time, this is the biggest purchase somebody will ever make in their lifetime. Owning a home is by far the biggest purchase most people will ever make. So it's buyers want to be kept in the know. They want to be kept through the process. A lot of times I see agents and even some other lenders, and not Bryan, and not Statewide Mortgage Company, but I have seen lenders where they're just completely MIA, like completely MIA. They don't answer their phone. It's very hard to get a hold of people. It's very communication goes a long way.
Right. And especially, when you're dealing with people that are typically working 5-6 days a week, okay, you have to be, as an originator, you have to be accessible to them when it's easy for them. Not maybe necessarily at 1 o'clock in the afternoon or 9 o'clock in the morning. It may be 7 o'clock at night. It may be Saturday afternoon at 3 p.m. It may be Sunday morning. That's another critical part of the equation of being an effective originator is making sure that you're available to the clients.
Definitely.
It's critical.
That's awesome. So I want to dive back into what is your message to someone who feels home ownership is out of reach?
Very simple. Dive into it. Get with a loan originator, dive into it, and find out. One of the things that we have seen a lot of over the years is you have a lot of people out there that are convinced for whatever reason that they cannot buy a home. And you talk to them, and a lot of times they'll say, well, I just don't think I can buy a home, and we'll say, well, why do you feel that way? And whatever they may give us various reasons. And I said, well, let's take a look at that. And a lot of times the people that don't think they have the ability are actually very well qualified.
Yeah.
So it's really just the opposite in a lot of cases. So it's almost like they go, oh, okay, when you say, well, you're fine, you're qualified for up to X amount of dollars, there's no problem. If you want to go house hunting, we can get you going right away.
That's funny. We see that a lot, I think, with credit score. A lot of times people are like, oh, my credit score sucks. And then Bryan pulls her credit. They got like 750 credit score, which is like amazing.
Right.
Yeah. So
they
you never know.
Yeah. You hear that all the time, but people say, oh, my credit's bad. My credit's bad. I said, well, do you have an idea what your score is? Well, I think it's like 670. Well, I can do 670 in my sleep. Okay. That's no problem. Okay.
Exactly. Yeah. And this is why it's so good if you're thinking about buying a home, whether it's your first time or you're a seasoned investor, it's great to get in contact with someone like Bryan, who's going to educate you. I mean, I don't know many lenders that are going to spend the time like Bryan does to actually educate our clients in this process. And it's really, really important. There's a lot of tidbits to understand and just be, in the loop about. So that's amazing.
Yeah.
Appreciate that.
There's a lot of, and people, don't understand what during the loan process, what is going on behind the scenes. And I like to explain it to them because, I'll say, hey, Mr. Borrower, you might not realize this, but I've got 4 or 5 people right now working on your loan behind the scenes. Okay, so keep in mind that you've got that group working for you, and that you may not see it, but it's happening.
That's a very good point, and that goes with everything. That goes with title. It goes with Flinny. It even goes to us as real estate agents. A lot of things that may look like smooth, easy as butter, but in the background, there's a lot of moving parts to make sure everything in a transaction goes very smoothly for our clients. A lot of time, a lot of hours goes into it, but it's worth it. There's such a joy in seeing our clients, thrive, and seeing them, really find their dream home. There's something special about it. There's really a joy that comes to it. I love it. This is why I'm in this industry. I really love what I do. And I can see that Bryan loves what he does too. It's not a money standpoint. I really enjoy, helping clients and serving.
Yeah, and how many, over the years, how many times when you see people that were convinced that they'd never be able to own a home, and the tears of joy, that I can't believe I just closed on my home, that's the best feeling in the world.
It is, yeah. And I just actually had a client I just closed on yesterday, and she's a first-time home buyer, and man, that was quite a process. And finding how she qualify, using those county programs, Hillsborough County, offering those down payment assistant programs, but just keeping in the loop and knowledge and everything that really matters, and ensuring that the client, understands and is educated. So.
Especially with the first-time home buyers.
Yes.
Some of the people that have been there, done that 2 or 3 times, they're not as concerned about it because they kind of feel like they know what's going on. But those new buyers need to know what's happening, or sometimes they get scared away, so they need to know what's happening.
That's awesome. All right, so I have some bonus topics here. We're running in about 12 minutes left. Bonus. Bryan was not prepared for this.
Here we go.
Here we go. So, can you buy a home while still paying student loans?
Absolutely.
All right.
We do it every month. We do it every month.
That's
yeah,
good.
yeah.
I get that question asked a lot. It would be surprised.
Yeah, yeah, and there's depending upon how they're structured, there's a lot of different ways to go about it. But yeah, in most cases, let's say I've got a student loan, I'm paying, well, just to pick a number, I'm paying $100 a month. It's no big deal. That's viewed just like as an installment loan for $100 a month.
Yeah.
So absolutely 100%. It's just included in your debt ratio and calculated accordingly. The other thing that's kind of interesting, it's just a side note to this. We've got wholesalers that have special programs for certain professionals, doctors, attorneys, okay, where they don't have to have a 2-year track record. They can come out and under that program. They can graduate from college or whatever, and they can buy immediately because that program is based on what the world knows as their potential for income.
Would you say that's like a physician's loan typically?
Yeah, exactly.
Okay.
Yeah.
Yeah, because I see that a lot with nurses and doctors. They typically will qualify right out the gate for a physician's loan.
Correct.
Which is amazing.
Yeah.
Okay, so a couple more questions, and then we're going to be out to outro here. Renting versus buying. At what point does buying make more sense in Tampa?
I think for the most part, it really comes down to a personal preference. Like we talked about earlier, are the people prepared for home ownership emotionally?
Yeah.
Am I ready to cut the grass? Am I ready to pay the garbage bill? Am I looking forward to doing that time? There are people like that, like myself.
Yeah.
I love working in the yard. That's my stress relief on the weekends. I work in the yard, okay? And so there's people out there that like doing that. If you're a condo person and you don't want to do it, you may not want to buy a single family home, but maybe you want to buy a condo. Maybe you want to get a townhome,
Definitely.
So it really boils down to, I once again, I think it's a good time to buy because of where the market is for the first time home buyers. We're seeing, as you know, good deals being able to be put together.
Most definitely.
For buyers. They're getting seller contributions. They're getting percentages off of the sales price. They're getting it's a buyer's market right now, so it's a good time to buy. Just a matter of if you're ready for what's involved in home ownership.
That's awesome. Okay, last question here. What happens if you lose your job during the loan process?
It's not the end of the world.
Okay.
Because in a lot of cases, depending upon what type of profession they're in, they can go get a job next week. I mean, the job market is strong right now.
Absolutely.
So and I've gotten those calls many times. Hey, lost my job, whatever, on Friday, but I've already talked to somebody. They want me to start next Friday. Not a big deal. We have to update all of our application information.
Absolutely.
We have to get another pay stub when they come in, get a verification of employment. But basically, if it's comparable income and the debt ratios are the same, usually not a big deal.
Okay.
If they lose it and they're going to take a 6-month hiatus, then we got a problem.
Of course. So actually, I have one more question. How can people contact Statewide Mortgage Company? How can they contact you if they want to get ready with the loan process and getting pre-approved? How could they contact you?
Very simple. Couple different ways. The phone number obviously is 727-797-0300. Our website is www.statewidemortgageco on the end of it.com. Statewide Mortgage spelled out co.com. And the quickest way is to call my cell, 727-276-8422. Call me directly anytime. And as Colton can verify, my phone's on all the time.
It is. Gotta love a lender that answers his phone on the first ring. Gotta love it.
That's right.
All right, Bryan. Well, I want to thank you again for bringing your value today, and just I know so many people feel that are listening, feel a lot more confident in their path to home ownership. So I really appreciate you hopping on. That is it for today's podcast episode. We are sponsored by the Colton Elliott Realtor Group and God We Trust and Real Estate We Excel, brokered by Align Right Realty Suncoast. Stay tuned to next episode. We'll be dropping another banger soon. Peace.
Thanks, Colton.
Appreciate it.